The stockings were hung by the chimney with care, which means it's time for Housing Market 2022 predictions. We're going to run through our predictions on supply and demand. We're going to talk about interest rates, plus home values and rental rates. We're also going to share when the spring buying season is going to start this year. It's a whole lot earlier than it's ever been. So if you're ready to dive into Housing Market 2022 predictions like you haven't seen anywhere else, hit that like button. And let's get started. We expect for Housing Market 2022 more record demand for buyers. And of course you're wondering, why would anybody want to buy in this market? Obviously values are through the roof, but there still are a lot of good reasons to buy. And one is a hedge against inflation. We continue to see inflation rearing its ugly head, so an asset like a house would be a good hedge against inflation over time. Renters may decide to finally jump in and buy when they continue to see the rental rates go up. We expect a lot of demand that's pent up, so buyers from 2021, maybe even 2020 that missed out, they're still in the market and they're shopping, as well as a new crop of buyers that come in every spring in the popular spring buying selling season. That includes the millennials we're hearing about that are now of age and ready to buy a home. Now some markets they may already be priced out of, so they may be looking at secondary markets to buy a home, get their foot in the door, literally and metaphorically, and be able to own real estate and maybe rent where they live currently. Our prediction for when the spring buying season starts is it actually already has. It's not even Christmas yet, just a few days before. And normally this time of year, it's absolutely quiet in the world of real estate, but this one has been crazy. My phone's been ringing off the hook for listings. Buyers out there were writing offers, and other agents I'm talking to are doing the same thing. So smarter buyers are trying to get a leg up. They're trying to get a home under contract before we get into typically busy time of year. It looks like we're actually starting the busy spring buying selling season right now, even before spring has sprung. The supply of homes for sale stays at record lows. And we have a chart here from Mike Simonson of Altos Research. We're going to be bringing more content from Altos Research and Mike later this year. But look at this chart and you can see that we're at record low levels for homes for sale. Does it look like we're going to get any relief from a wave of inventory at all? And the short answer is no. For example, forbearance. We thought the homes that went into the forbearance programs, as they started to get kicked out, would lead to a flood of potential homes for sale. And that has not materialized. The homes that went into forbearance early on in the programs, they're now starting to come out. That's been October, November, December, and we're seeing that a lot of those folks are able to potentially sell with equity. It's not a distressed sale, or are able to hold on to their home. While we were over 2 million homes in forbearance, we're now at around 850,000. Just to put it in perspective, in the previous bust, there were over 10 million homes that had loans that were behind on them. So big difference in numbers back then. How about new homes? Can builders keep up? The short answer is no there as well. Builders have been facing supply issues and labor shortages. We see that in the marketplace now, and they haven't been able to keep up pace with construction, especially in areas that are supply constrained already. Those tend to be areas where it's tougher to build. So Southern California is a prime example where it is not easy to get a project entitled and get those homes delivered. In many cases, for larger projects that would help alleviate the crunch of homes, it can take literally decades to get those homes finally built and sold. We don't expect new homes to flood the market and create any sort of supply relief. And foreclosures. Does it look like we're going to get that wave of foreclosures that's going to finally lead to more inventory and price reductions? Again, the answer is no on that front. We've been doing our Southern California real estate market updates, and we've been tracking the notices of default and the notice of sale. And those numbers are not even at normal foreclosure levels. The foreclosure moratorium ended at the end of July, and we did see a slight uptick, but they're still low. There's a long way to go before there's any risk of foreclosures causing a flood of inventory. Additionally, according to ATTOM data, the average time to foreclose on a property in third quarter 2021 was up to 924 days. The foreclosure process is literally taking years to finally get to the point where that home would be foreclosed on. So that means that we may not see any sort of wave of foreclosures until potentially 2023 or maybe 2024, if ever. We still need to get to normal foreclosure levels. And if you're wondering, where did all the inventory go? We got some answers from Mike from Altos Research, and we have some other answers we're going to share. So make sure you subscribe to this channel so you can find out exactly where all the inventory went. How about interest rates in the housing market? They're going up, but I don't think they're going to go up as much as some people think. We know because of inflation that the Fed is starting to step in. So they're tapering off on the bonds that they're buying, and they're going to be increasing the Fed fund rate. Now, this doesn't directly affect the interest rates you pay on mortgages, but there is a correlation. So as the Fed increases that rate, eventually it will lead to increases in mortgage rates. As far as the news we just heard in late December, that may already be baked into the rates. So who knows if by March of 2022, rates will go up much beyond where they are. The Mortgage Bankers Association actually predicts that by the end of 2022, rates will be around 4%, and through 2023 will go up a little bit more, but we're not going to hit 5% for a long time, according to their predictions. You can see in the data we've run from November 2018, that was a time when rates hit almost 5%. And what happened in November 2018 is that inventory increased. So sellers decided to put their homes on the market, and buyers slowed down on writing offers. So it did affect the market. Ultimately, rates backed off of 5% and the market stabilized. But the real question is, and it sounds like a crazy question is, but what is the equivalent of that 5% in our market now? Is 4% the new 5%? What percentage will we see a change in the marketplace and see buyers backing off from purchasing? That's the unknown. Another big unknown is what happens with inflation. The Fed may have to take more dramatic steps in tamping down inflation, which could lead to an increase in rates that's faster than most people are predicting. So we'll have to see how that plays out. At the very least, it looks like through 2022, unless something extreme happens, that rates will barely get to 4% by the end of the year, which historically is still amazingly low. And when you factor in inflation, it's actually essentially free money. And where do we see home values going for 2022? They're going up. We predict another big increase, not as crazy as 2021, but we expect about 10% for 2022. We feel strongly that what will happen is early in the year, the spring buying selling season, we're going to see a dramatic increase because of tight inventory. Those values will go up. As we get later into the year and interest rates start to go up, it's going to put a bit of a brake on the increase in values. We expect towards the end of the year that the increases will slow down. So earlier on it'll be faster and then kind of slow down towards the end of the year. And then 2023, we expect prices to continue to slowly increase, but at much more affordable, healthier levels of closer to 3%, which is typically what we can expect real estate to do in more normal times, is about a 3% price increase in a year. For 2022, make sure you have your seatbelt on because it's going to be another crazy one. Rental rates. Unfortunately, renters, it doesn't look like there will be any relief for you anytime soon. And I got a few pieces of advice I'll give you at the end of this update. According to CoreLogic, for single family homes, rental rates year over year are up 14%. In some markets, it's even crazier, like Miami, where it's up 30% year over year for single family homes. As for apartments, RealPage states that rental rates for new listings for apartments are up 14% year over year. And again, some markets are even higher. These are crazy numbers, and we don't see things slowing down for rental rates anytime soon. We have high occupancy levels, which means low inventory for new rentals. Renters expect rent increases, and what you can do is you can attempt to lock in your lease for as long as possible. Try to get 18, 24 months, even 3 years. Offer to lock it as long as possible. That'll be a hedge against increases. And the other big tip is check your local area for any legislation or regulations related to rental increases. In some cases, there are regulations that prevent increases beyond a certain level. So check your local area and see. California's one, for example. We statewide have rental caps which prevent rents from being increased beyond 5% plus the consumer price index. Additionally, some areas are even more strict. Santa Ana in Orange County just rolled out much more stringent increases on rent. Now, bear in mind that there may be exemptions to some of these regulations. For example, most single-family homes and condos are exempt from these regulations in the state of California. So make sure you do the research, renters, to see if there's a cap on rental increases. For more advice for tenants and landlords and buyers and sellers on navigating 2022 and beyond, make sure you subscribe to this channel. And you can take a look at this video, one of our most popular from 2021, where we're giving advice to buyers during the crazy spring buying season back then. You can click the link above, or we have a link in the description below. Make sure you subscribe to our free weekly email newsletter. We cover topics like this to help you make the best decisions in crazy markets like this. This has been Christian Walsh, real estate agent with Wire Associates, and we'll see you in 2022.